Okay. You're up, John.
Okay, welcome back, everybody. Before I continue this overview this morning, I wanted to mention who I am. Somebody in one of the tables said, can you introduce yourself? And I forgot to do that, I guess, when I did my opening. I'm John Costanzo. I'm the Executive Director for Maple's New York chapter and your host for this afternoon or morning session, wherever you're participating from. So first, before we get going, I wanted to talk a little bit about Maple, give you an update. I hope you enjoyed that networking session, got to make some new contacts. That's the whole basis for Maple, to provide a platform for you to make connections with people of like mind in developing cross-border trade and investment. So let's talk a little bit about how we're doing. And I'm pleased to report that despite the pandemic, Maple is continuing to expand. We can go to the next slide. Today, Maple members are represented across 21 industry sectors, and our members serve at the director level and above. So it's mainly people that are engaged in making decisions for their businesses and throughout the whole continent. Our membership to that point is geographically diverse. Today, members are represented in 18 U.S. and Canadian markets, spanning the continent from Vancouver and LA in the west, and to New York and Montreal in the east. And our members split evenly between the U.S. 58 members, 50% up in Canada, across 4 provinces. So our membership is diverse and spread in a manner that helps facilitate our mission to support cross-border trade and investment. And I'm pleased to report that we've added quite a few members in 2021. From Vancouver, I'd like to welcome Ms. Olena Poliski, Managing Director of Art One Translations, whose agency provides multilingual, and I could use her help, obviously, translation work for firms internationally. And also Mr. Marko Dekovic, Vice President of Public Affairs at Global Container Terminals, who operates terminals in the Port of Vancouver, New York, and New Jersey. And today, I'm really pleased to announce again that the government of Quebec decided to join Maple through the Delegate General Office here in New York. Besides New York, Catherine Loubier, who heads up the Delegate General here in New York, covers a broad swatch of northeastern U.S. Markets, and we're thrilled to welcome this key Canadian province to our Maple community. So bienvenue, Catherine, and the Quebec team based here throughout the United States. And we just are pleased to announce that this week, Turbo Images, which provides fleet graphics for commercial trucking lines and public transport agencies, has decided to join. They're also a Quebec-based organization. Welcome Pierre and Charles Villou from Turbo Images. And to encourage even more networking and sharing of information among our members in the community, we've launched a new channel we've titled the Mighty Maple Network. And we hope you can join us and share information offline with your members, or online in this case, but outside of our regular events with other members and constituents that sign up for this channel. We hope to welcome you to this new site soon. As for what's coming soon, in our next issue of our newsletter, Momentum, we'll be interviewing an executive named John Keisler, Director of Economic Development at the City of Long Beach in California. Maple, as you may know, is a proud partner of the City of Long Beach and has led the city delegation to Canada on their behalf in the past. Our interview will appear this week in our March issue of Momentum, and I hope you'll be sure to take note of that. And our monthly Momentum newsletter also provides a platform for members and partners to share cross-border insights. For example, recent articles we've done included a profile of the collaborative communities in the public and private sectors of Ontario, trade and investment offices here in New York and San Francisco. Perspectives on timing and strategies for patent examinations was covered in another article by the IP law firm Kenobi Martins. And an article on resilient leadership in uncertain times by the Business Development Bank of Canada's advisory services. And our community is growing in more ways than that as well. In particular, we've had a wonderful opportunity to listen to our members' DEI insights and best practices, and to share those through the communication channels I just covered in our organization. We're focused on promoting more diversity, equity, and inclusion in how we grow our community. And here are a few examples. Go to the next. Yeah, we published our DEI mission recently. You can see that online. We had a presentation by Ontario Collaborative Community on Public and Private Sectors. We did a Maple member interview of their DEI initiatives up in Vancouver in February, and we're sharing content on this throughout the quarter in our platforms. And if you keep an eye open in June, we'll have an entire issue devoted in Momentum to this important topic. Despite the pandemic, Maple's thriving and growing in many ways, and will continue to strive to bring you content and experiences to promote cross-border trade and investment. Now, with that in mind, let's meet today's first presenter. Paul Tessy, that handsome young man there seen in the slide, is the Senior Vice President of Purolator International. Paul has broad experience in leading and facilitating cross-border trade. He is responsible for leading the company's international business, which includes significant U.S.-Canadian cross-border business, global solutions, and value-added logistics. Paul comes to Purolator, that is, from DHL e-commerce, where he held a number of senior roles, including CEO of Latin America and Canada, and Senior Vice President, Sales and Customer Service. Prior to his work with DHL, Paul held a variety of global leadership roles with TNT, including President and CEO of TNT Spring in the Americas. Paul holds a BA in Industrial Engineering from the University of Toronto, and I'm pleased to say I know Paul personally, worked with him closely at least two of those companies, and we're thrilled to welcome him, that is, to today's session to give us an overview of some of the things that are going on in the area of logistics, driven mainly by the pandemic. So Paul, if it's okay, I'm going to turn the reins over to you to take us through your overview.
Great. Thank you very much, Sean, and I want to thank our colleagues and friends at the Maple Business Council for hosting us today. The title of today's content is Innovative Delivery Solutions in a Pandemic-Altered World. That's a mouthful. Let's go to the next slide, please. COVID has had widespread and cascading impacts on the macroeconomic environment. And in today's session, we're going to look back and forward at the economy. Is it possible to scroll forward, please? Maybe there's a delay.
Having a slight issue. Bear with me a second. I guess I have to stop my screen sharing and try again. Sorry about that.
Let's try it over. This is one of the.
Sorry about that.
No worries. This is all part of the pandemic. You know, adjusting and being innovative in times of the pandemic. This is technology and technodrama is part of the landscape.
Yeah, sorry about that. Bear with me.
No problem.
There we go. I think I'm going to have it this time. There we are. Sorry about that.
Okay, great. Thank you. Thank you, Robert. All right, so we're going to look back and forward at the economy and review some of the sticky trends that have emerged. In these times, consumers have adopted all sorts of new behaviors to help them endure the time in lockdown in their homes. Many of these behaviors, such as baking bread in the home, are likely to fall by the wayside once life gets back to normal, but many are expected to also have staying power. We'll also review some of the implications that COVID is having in the logistics industry. New opportunities and challenges have emerged in this changing landscape. U.S. retailers today are taking advantage of Canadian consumers' strong demand for online shipping, while also utilizing this new duty and tax regimen, which was negotiated between the U.S. under the USMCA agreement that took a hold in July. Manufacturers and suppliers can also tap into the growing number of manufacturers looking to move supply chains out of China, out of Asia, and closer to home. And lastly, manufacturers also have the opportunity to reboot their supply chain with increased resilience on technology for flexibility and scalability. Next slide, please. There will be a staggered path to full recovery of the economy between the US and Canada based upon the level of restrictions in each of the countries and the timing of the vaccine rollout. Let's look back at just how deeply the virus affected the two countries' economies and the path of the economies that the countries are taking to regain their footing. First off, US GDP declined by 3.5% in 2020. The Federal Reserve is now forecasting a healthy 4.2% annualized rate of growth during 2021. The U.S., everyone knows this has been, in the headlines, but the U.S. recovery has been bolstered by this stunning $1.9 trillion COVID relief package that was passed by Congress last week. And this stimulus package is going to fare into every area of the economy: direct payments to most Americans, schools, states, infrastructure, localities, aviation, restaurants, and those that were most hard hit through the pandemic. In Canada, the pandemic dealt an even more severe blow, with Canada's economy contracting by 5.5% in 2020 and experiencing what the Conference Board of Canada describes as one of the deepest recessions in modern times. The Canadian government also responded with aggressive stimulus spending. As of December of last year, the country spent about $380 billion. That's roughly 20% of Canada's total economic output on COVID-related spending. And there's another round coming as well, another $100 billion that is likely that the Trudeau government has been putting forward. Next slide, please. The critically important U.S. and Canada trade relationship was affected as manufacturers largely shut down, retail stores closed, and demand for oil and gas plummeted. All of you know this. You see this also in the headlines. U.S. exports to Canada fell by 41% during April, year over year, and the Canadian exports to the U.S. also dropped by 44%. The good news, however, is that by December, trade largely rebounded, with December's cross-border volume down a very small and modest 4% year over year. And you'll see there on the left-hand side some of the categories that were affected. Some industries affected more than others. Next slide, please. Consumer spending proved surprisingly resilient throughout the pandemic, and this has been driven by primarily two factors. First, as I mentioned, lots of stimulus in the US and Canada. Qualified Americans received a stimulus check of $1,200, a second payment of $600, now with this third round, another $1,400. In Canada, the emergency response benefit provided $2,000 each month to qualified residents. So we are seeing that. Secondly, a significant increase in disposable income driven by that government stimulus and the prolonged lockdowns. So the Bureau of Economic Analysis reported that a 10% increase in personal income in January, with an 11% increase in disposable personal income. This is the most staggering one. In Canada, lower income households saw their disposable income increase by almost 37%. So this combination of stimulus payments, more consumer savings, money not spent on traveling and restaurants led to the massive surge in spending. And consumers locked down in their homes, they turned to the internet, quickly learned everything they could about buying online, all the products that they could purchase, for example, from the US. And we saw a huge shift from services into goods. And that included, and you guys know it because I'm sure you've all been doing it, home appliances, furniture, exercise equipment, barbecue grills, patio furniture, renovations in the home, everything to make our lives more bearable in these challenging times. Next slide, please. The next slide shows the stickiness continuum from less sticky to more sticky. So let's talk about some of the key COVID trends. Services to goods was one of the several noteworthy trends. That's probably one that's going to be less sticky when things start opening back up. Big over small, big box retailers, internet behemoths were clear winners during the pandemic, largely because physical stores were generally considered essential and exempted from mandatory lockdowns, as smaller retailers were forced to close. As an example, Walmart Canada posted a 229% increase in online sales during Q4. Nearshoring, the sudden shutdown of global supply chains left retailers vulnerable to their China-based sourcing strategies. As a direct response, 65% of retailers surveyed over the past quarter said they were expanding or establishing domestic manufacturing capacity. In that same online survey, retailers also said that nearshoring, that they wanted better quality control through that nearshoring, shorter lead times, and better inventory management. It's possible if you keep that close to home. Deurbanization. An interesting trend is that many city dwellers realize that life in a lockdown city isn't that appealing. So what they did is they went to remote work, given the closed restaurants, the schools, nightlife, and they moved more to the suburbs and even into the rural areas. Cities including New York, San Francisco, Chicago saw a steady exodus of residents who opted for less expensive, more geographically appealing places like Miami, Dallas, Phoenix, Denver, and Atlanta. And that shift also impacted the delivery companies in terms of where those packages had to go. Digitalization, very important and likely more sticky. The pandemic was a reality check for businesses reluctant to embrace a digital strategy. According to Deloitte & Touche, COVID turned digitalization from a nice to have to a must have for businesses to keep their doors open and operating efficiently. And lastly, this massive megatrend, perhaps the largest megatrend that we'll ever see in our lifetimes, e-commerce. The megatrend of e-commerce was clearly the biggest story of the pandemic. In the United States, e-commerce sales surged by 44% during 2020 over 2019 levels. Online spending accounted for 21% of total retail sales, compared with 15.8% the previous year, a massive surge in penetration of brick and mortar. One analyst described this as 10 years of expected e-commerce penetration growth in just 3 months. Canada also saw a similar surge in e-commerce. And I would say even in some ways, Canada was a bit of a sleepy environment prior to the pandemic. May saw a 99% increase over February levels and a 111% increase compared to the previous year. All of this buying came at the expense of brick and mortar traffic. Mandatory lockdowns forced those shutdowns, and as a result, e-commerce ate share. So again, and this is really, we don't really know exactly when and how these things play out, but I think we do see, digitalization and e-commerce being the more sticky trends that will stay. Deurbanization, perhaps. We have to see. Nearshoring, perhaps. Next slide, please. So e-commerce is poised to continue to be the dominant story in retail sales. In fact, retailers are becoming even more creative in their use of digital strategies. Nearly 70% of businesses say they're accelerating their investments in digital platforms. As a result, Canada's Hudson Bay Company has announced plans to expand its website offerings to include third-party sellers of electronics, sporting goods, and other non-traditional products. In doing so, the iconic Canadian brand is taking a stab at Amazon and eBay, among some of the other e-commerce powerhouses. Next slide, please. So anyway, how are logistics company, and how specifically is Purolator responding to these trends? Our task has really been to stay ahead of the trends and proactively anticipate our customers' needs. And it's because of our unique position in the United States and Canada that we're very well positioned. We were very well positioned when the pandemic hit. We were able to leverage the power of networks to develop innovative solutions in the market. To give a few examples, one is Purolator Your Way. As the name implies, the solution allows customers a high level of flexibility to control where the delivery will occur, and you can change locations. A customer can access their account to select a specific delivery date. I won't be in the home on that date. Can we please roll the shipment to the next day? Should this change need to be made, the customer can just update their account to reflect that new information. Self-service offerings. In some instances, consumers simply prefer to avoid the package being delivered to their home, and they would rather sweep one of the self-serve offerings that we have: parcel lockers, kiosks, and also hold for pickup. Rather than just go to the home and realize the package is not there, have it sent back, and try and find that package, we also offer these hold for pickup capabilities at various locations throughout Canada. Next slide, please. This is a really cool one. We essentially bring the mobile warehouse to the individual and business customers through our fleet of mobile quick stop vehicles. A customer who misses a delivery attempt can go online to arrange to retrieve their package at the mobile van assigned to their locale. And this basically avoids the very inconvenient practice of having to contact the provider to reschedule a delivery or stick around and waiting for the next delivery. Let's not forget returns. For some retailers and e-tailers, roughly 25% of everything they ship has to go back to their stocking locations. And a seamless returns process is an integral part of the consumer expectations nowadays. That's how we sell. We buy 5, we try them on, we send 1 back. So these innovative solutions really give businesses the flexibility and options they need at a time when many logistics companies are forcing retailers and other companies to adjust expectations. We're very much out in front trying to find these solutions and implement them. Next slide, please. Okay, so far we've talked about B2C and all the e-commerce trends, but many companies deal exclusively with other businesses, just B2B. And they are also adapting significant changes to their operating strategies. Certainly the way businesses operated a year ago is different in how they're operating now. China-based supply chains, for example, considered in the past rock solid, have cratered. Highly efficient forecasting models can no longer keep pace with today's realities. Companies are shutting down. You have flare-ups of COVID. There are stockouts, many changes. And as a result, many of these B2C companies are looking to insource, and they're looking to nearshore. So just an example, an executive called out that it would cost roughly $4,300 for a container to be shipped, a 40-foot container to be shipped from China to the U.S., whereas from Mexico, that would be $1,800, and that could be delivered within days. So many companies are now analyzing and looking at their supply chains, thinking, well, wait a sec, maybe I should relocate to North America, either within U.S. or within Canada, or even within Mexico. Right, next slide, please. Some other interesting B2B trends to consider: resiliency of the supply chain, multiple options for speed. Companies are more and more enabling shipping from different locations, not being dependent just on one source. Need to reconsider where the inventory is stored. Dealing with stockouts, disruption, supply chains also requires additional solutions. There's this blurring of the lines between B2B and B2C. Many of the B2C consumers are also B2B decision makers, and they're seeing how convenient and how easy it is to do business in this online world of B2C shipping, and they're adopting many of those policies in the B2B world. Air cargo, as we all know, air frequencies have plummeted. The airlines are in a very tough spot, and many of them have repurposed their passenger aircraft to freighters, and they actually call this, there's actually a term for this now called a freighter, with a P for passenger on top of freighter. Also, of course, healthcare, the distribution of PPE, the distribution of the vaccine, the solutions for the vaccine, all the respirators, all of this is very expedited and is also taking capacity on many of the air freighters and freighters. And then, of course, there's also been this decline in the use of large aircraft as well. Next slide, please. So, as businesses adapt their changing needs, we find this premium mission critical product becomes more and more relevant. This is a product that we offer at Purolator. As the name implies, mission critical service offer fast, on-time performance at the highest levels of customer service. Our mission critical team can come up with a solution for our customers literally within minutes. I have this breakdown, I need this part, it's in China or it's in Germany, how do I get it here right now? And our solution may include a next flight out service, it may include a ground service, it can also be hybrid, involve air and ground, but what in some cases it's doing is it's bypassing the traditional hub and spoke networks of the courier companies. Also, the dedicated logistics professional stays on that shipment until its final delivery, and we've got advanced tracking systems to really track this minute by minute. So it really is like the top velvet glove service to try and respond to the environment of COVID. Businesses with non-critical shipments are attracted to mission critical as well because the speed and the visibility and consistency of service that they require. And just some of them want that peace of mind that that product must be delivered on time. Next slide, please. So these are the types of industries where mission critical products are really sought after. Automotive, just-in-time delivery parts, fashion, fast fashion inventory replenishment, high tech, parts to fields engineers, parts to routine maintenance to avoid shutdown of facilities. We talked about healthcare and life science. Oh, I'm seeing something come up on the screen. Industrial, very important to keep the industrial sector operating, critical spare parts, and of course retailing, demand-driven replenishment and special orders. So in summary, on the last page, we are headed towards an economic recovery. However, we must be a bit cautious to kind of temper that optimism. It is a double-edged sword. The economy could become overheated with all the stimulus money. We're just kind of printing money. And there could be some inflation that emerges, rate hikes, volatility in the bond and equity markets. Secondly, some COVID trends will stick, others will not. Sourdough starter kits at home, maybe a fad. Parcel industry has been accelerated. This is something that probably will be very sticky, and this trend of e-commerce megatrend still has a lot of room for growth, even though some of the move to services will temper that from goods to back to services once things start to open up. Innovative B2B delivery solutions will continue to develop. Consumers are going to demand more and more convenience at the right price point. And lastly, the need for speed. Solutions will have increasing importance given the volatility of the logistics value chain, supply chains. Speed and reliability become more important than ever. That's really it. Those are the key trends. I want to thank everyone for their time and attention, and I think we have time for a few questions, I believe. Are we moving to questions, John, or are we doing the presentations and doing all the questions on panel?
I think we'll take some questions now, if that's okay. One of them came in is, you mentioned that just on this whole mission critical service, Paul, how can members, if they're interested on either their behalf directly or on behalf of their clients, access that service through Purolator?
Sure. What I would suggest is through Maple, reach out to myself through our This Business Council. I will meet with you and discuss, the demands, and then I'll connect you with one of our very specialized professionals in the mission critical department, and we'll be up and running. The onboarding literally takes an hour. we run very.
Excellent. Another question I had, Paul, was that you had mentioned that you're seeing a huge explosion in e-commerce, which every one of us can identify with. But curious, what's happening on the other side of the equation, the industrial sector? How do you see that faring? during this pandemic? How are they coming out?
Oddly enough, well, if we just look to, obviously we saw the contraction, April, May. We started to build up. I would say December, we were also still probably 5, 8, 10% behind. January and February have come back very strong in our industrial. If you think that Purolator, because we're involved in many areas of the industrial sector, I would say we're probably up year over year. Keep in mind, Jan, Feb not really having affected by COVID, not greatly affected. It didn't really hit until probably mid-March, April. But I would say we're actually up. We do have some growth in the industrial sector. I would say probably between 3 and 5%.
That's terrific. Yeah, and one other question came in is, where do you see the opportunities for members to invest? You have a kind of a unique position, right? Your business spans multiple sectors, right? You see consumer goods, industrial goods, medical, pharmaceutical. If you were investing in building a cross-border trade today, based on what you and your colleagues at Purolator are seeing, where would you put your money?
So I would, I would say all the key sectors that I mentioned are interesting. Some are growing between 2 and 3% per year, and others, such as e-commerce, are still, the growth is expected to be double-digit over the coming 5 years. The challenge with e-commerce, it's a very low-margin business, and it really is a penny business. So it's much more competitive, just given the Amazonian effect. So you really have to think about it being like a scale business or having a niche within e-commerce to go there. But I would say, healthcare, obviously, an industry sector that's doing very well now, really driven by COVID response and the pandemic. Transportation services actually coming back, industrial as well. So I think all of them have got runway and growth where we see them right now, specifically in the package and LTL logistics areas. So I would say all of them interesting, but some with more growth than others. Maybe again, if that individual could reach out to me, I could provide some guidance, given that we've got a very good cross section of all the industry sectors, and depending what products are driven in each of those areas, we could probably direct in terms of focus on these products versus those products. So, for example, elective surgeries in the during the pandemic really crashed and are still recovering because some people don't want to go for elective surgery. That affects elective surgery equipment, for example. But things that are essential are really starting to bounce back.
We had 2 other questions. One is, you mentioned vaccine, PPE was booming during the pandemic, and I guess it's still ongoing. But how has it impacted the supply chain in your view? What impact has that phenomena had on the supply chain? And maybe from your perspective, how has it impacted Purolator supply chain or operations?
So I would say healthcare in general, given the massive surge of B2C, and generally these networks, B2C and B2B, primarily rode their networks together. So when you have these massive surges in e-commerce, you usually, especially in times of peak, have got delays. Like if that volume is going to grow 40% in a given week, 40, 50%, nobody has that accessible capacity on the moment, on the spot, because the cost of holding that capacity is so high. So one of the developments that we've done is we've actually segregated our B2B, segregated our healthcare, have separate labels, separate processes, separate scanning, in order to protect the very important healthcare products and supporting the communities in Canada. And that's one of the examples. Before, these products, because they, some were growing 8%, some 3%, some 2%, you can kind of handle them all in the same processing center, all with the same in the same network. But because some were surging and some were maybe more stable, very high priority, we found that tiering of the business in terms of quality, in terms of control, was important to ensure that very high priority B2B shipments and also healthcare life science shipments maintain the highest level of quality. And at the end of the day, some of the B2C volumes, I think it's more about expectations. You could slide the delivery down a day or 2 times of disruption in times of peak. as long as you manage the consumer's expectation. So that's really what the call out would be: segmentation, strengthening of B2B, protecting B2B, and also doing the best in the B2C product.
Yeah, I imagine that's increased the need for industrial engineering, right? Your background originally, figure out how to do that segregation right fairly and equitably and efficiently as well. Well, Paul, as always, excellent job and an overview. I appreciate your taking all this time with us today and for giving us a good picture into how this pandemic is affecting this whole world of logistics. And I encourage anybody with questions, working session afterwards, follow up with Paul. He's got quite a bit of experience, not just in Canada, but globally, and may be able to provide some insight there for you as well. Thank you, Paul. And now our next presentation, we have two leaders, as I mentioned, in the Toronto Stock Exchange joining us. We're actually going to start, Robert, if you move to the next slide, with Delilah presenting first, and then followed up here by Reid. So if we can move to Delilah. There you go, thank you. So Delilah Panio is Vice President of U.S. Capital Formation for the Toronto Stock Exchange and TSX Venture Exchange based in Southern California. In this role, Delilah advises U.S. companies on the opportunity to list and raise capital on Canada's premier equity markets. She's a frequent speaker and pitch competition judge and coach. That sounds pretty interesting, actually. I'd like to hear more about that. And was named 19 Top 100 People in Finance magazine. We're thrilled to have Delilah with us today and look forward, Delilah, to your overview.
Thank you, John, and hello, everybody. It's a pleasure to be here. TMX Group is a proud sponsor and member of Maple Group, and I am also on the advisory board. So we've had a really great partnership for the last couple of years, and really happy to be here in this opportunity. So if you can go to the next slide, or beginning my presentation. So what I'm going to do myself and my colleague Reid, so I'm based in Southern California and Reid is in New York. So we're going to tag team this presentation today. And we're going to talk just about, what's happening in the Canadian capital market. So certainly feeding on what, Paul was talking about in terms of trends, especially in e-commerce, we're certainly seeing the effects of this in the capital markets. Next slide, please. So last year, so first of all, a year ago, how many of us, especially in the capital markets, were sitting as the pandemic was hitting, and we were all wondering what was going to happen for the year, and certainly thought that things would be very, very slow, if not completely halted. And what ended up happening, I think, like we can all agree, was the most unexpected surprise in terms of the markets being incredibly robust. And in fact, on our market, on TSX, we ended up having a record year in financings, especially in the technology and innovation space. And so we had a record number of IPOs on TSX. We had the largest tech IPOs in the history of TSX. One was in the fall, and that was by Montreal company Nuvei, which is in the payment processing space. So obviously all related to this e-commerce. And then earlier this year, we had the large and even larger, and to date, the largest tech IPO by TELUS International. So, what is this saying about what's happening, in the markets, what's happening with the trends, as people are obviously looking for, where to put their capital and raising capital. Next slide, please. So we had, like I said, just a fascinating year with these large IPOs, record financings, and we are traditionally known as a natural resource, marketplace with mining, oil and gas as our 160 plus year history. But really, in the last 10 years, and certainly in the last couple of years, of the robustness in terms of innovation companies, tech, life sciences, clean tech companies. And really interesting, our TSX Venture Composite Index, was only outperformed by Bitcoin last year. So, that just speaks to a lot of the money that is flowing right now. And, people always ask us, why, like, what's happened? And I think it's just some of those trends, that Paul was talking about in terms of, consumer spending, and then just this incredible robustness of the markets for people to access capital. And that's happening obviously in the U.S. as well as in Canada. Next slide, please. So what Reid and I are going to do is just give you a brief overview, again, recognizing the wonderfully diverse audience we have today. And so typically we're talking to, U.S. CEOs about looking at raising capital, but I thought it'd be fun to kind of give you, how we talk to companies in terms of if there are any entrepreneurs on the call today, or if you are connected to any. I know a lot of the one of our counterparts at some of the governments for Canada and the provinces are on the call today. So, as you're talking to U.S. companies about different capital options, and certainly as you're talking about Canada and the strong relationship between Canada and the U.S., one segment that often is not talked about is actually the securities and the flow of capital between our two markets, and the number of investors on our market from the US and companies coming to our market to access capital. So I'll just very, very quickly run through, kind of fun to get into the mindset. If you're a US CEO looking to raise capital, why would you be thinking about going public? And certainly why would you be thinking about going public in Canada? So next slide shows the North American equity capital market. So, everyone's familiar with this much sought after path of, raising a small amount of capital, going to angel investors, getting venture capital, and then either exiting by selling, by being acquired by a big company, or doing a large IPO on NASDAQ or New York. But the value proposition of the Canadian capital markets is we offer an alternative to that private VC route that might be of interest to CEOs. So next slide. So there's kind of four things to think about, about going public. And again, this is, relevant for anyone on the call who also is connected to companies in this space. Is, does your company have a reason to be public? And so what's interesting is, again, what's happening in the U.S. markets where the IPOs have gotten so large. The average IPO is over 250 million, with a lot of multi-billion-dollar IPOs. And so thinking about, if you were an earlier stage company, why would you consider it? And of course, the number one reasons would be access to capital and acquisition currency, the ability to grow your company by buying other businesses in your space. And then of course, the opportunity to diversify your shareholder base and creating, incentives for employees with public stock versus private paper. And then just this idea of having the credibility and exposure of being on an international exchange. Next slide. So then the next consideration really thinking about is, are you ready? Is your company ready to go public? Because obviously going public is a big deal. And it takes a sophisticated management team and board of directors. We're looking for audited financials. So you have to make sure that your internal controls and your, fiscal management is up to speed for being able to go public. And this concept of how much time that the CEO will have to do on investor relations and then be taken away from the business. And then, of course, the number one consideration is just the transparency. So being a public company and having your financials out in the public, it makes sense for some companies and doesn't for a lot of other companies. And so those are the companies, again, just in this mindset of, is the company ready to go public? Next slide. And then, the next consideration is, does this company meet the exchange's listing requirements? And just for those who are familiar with the U.S. capital markets, the listing requirements on NASDAQ or New York Stock Exchange are based more on things like shareholder equity, share price, and market cap. In our market, because we are often dealing with much smaller companies on the venture exchange, our listing requirements are based more on the financial fundamentals of the company. So we're looking for working capital, revenue, earnings, or net tangible assets. And, we do, as a regulated public venture capital marketplace, we do actually take companies public that are pre-revenue. So if you think about our history of mining and oil and gas exploration companies, and now certainly technology companies, life science companies that are pre-revenue, we do have a marketplace that allows for these companies to access the public markets while being regulated, unlike some of the, the over-the-counter markets in the U.S. You can certainly, get more information on our guide to listing, which actually, when we're back in the networking room, if you click on our logo, it will take you to the U.S. website, and there's a lot more resources there for you. And then the next slide, please. So, what I like to say is that, you can have every reason to be public. Are you ready to go public? Do you meet our listing requirements? But what's the reality? And the reality is can investment bankers, get investor support for your company today? And that, of course, is what depends. And so this is what's been so fascinating in this last 9 months or so with, like I said, with record financings and in the innovation space. And we're seeing such a diverse, it's actually across almost all the sectors, which is really interesting, because usually there can be a boom maybe in mining or in tech, but it's really across almost all sectors that we're seeing a very robust pipeline of companies coming to market, and also companies that are already listed raising capital. So in sectors, again, from what Paul was talking about, not surprising, e-commerce is significant. Anything in the healthcare, health tech space, we're seeing because of innovations in mental health, and certainly we haven't even yet begun to see the impact of COVID on this. And so I don't have my presentation, but I'm sure it'll come back. Okay. And so the impact of the markets. And so we're seeing things like psychedelics companies. We're seeing a lot, more in the cannabis and life sciences space. So again, as the trends, as we all shifting how we're living and working, you can see these trends being followed in the capital markets. So I'm going to now pass it on to Reid, if he can come to the stage, and hopefully we can get our presentation back.
Yes, we'll get Robert's help with that. If you would, I'd like to introduce Reid before he begins his comments. Robert, could you go back to Reid's bio? Okay, maybe not. So if it's okay with you, Reid.
For some reason, I'm really hard to flip back and forth between these things. So
yeah, no problem. I'm just going to read through it then, if that's okay with you. Reid is an advisor to the Toronto Stock Exchange, working closely with Delilah, as well as the Venture Exchange, based here in New York City. In addition to his work with TSX, Reid is also director of the New York chapter of the Founder Institute, a pre-seed accelerator in 200 cities around the world. He also serves on the board of the New York City Innovation Collective, a nonprofit-focused organization focused, that is, on supporting the innovation community in New York and connecting it with other ecosystems globally. So Reid, I wanted to do that so folks had a little bit of an idea of your background as well. Over to you.
Thanks. Yeah, thanks so much, John. Appreciate the intro, and Delilah, thank you for setting up the presentation here. Get back to so the next slide after this here. The question, I think, for most companies, particularly in the U.S., is why would I think about listing in Canada on TSX or TSXV? Next slide, please. So, just to give a little bit of a context about the Canadian markets, Delilah did a bunch of this, but so some of these numbers will be duplicates a bit. But I think it's important to realize that the Canadian public markets are most years the third largest source of capital for companies in the world, behind the U.S. and China. So, as she mentioned, 43 billion was raised last year. 1.6 billion of that came from U.S. companies. Was raised for U.S. headquartered companies, and it's really an international exchange. About 40% of our daily trading volume comes from outside of Canada. Which is fairly unusual for kind of any stock market around the world. Next slide. So, and it also goes to our listings. We have over 220 international companies that are listed on TSX and TSXV. About half of those come from the U.S., but there are also other markets. We have a number of companies from Latin America. Israel has become a really big market for technology listings, and I think what's also important to realize here is how that trend has been accelerating. So we've had 40 companies from the U.S. list just in the last 5 years. This year, in the first 2 months of the year, we've already had 5 companies from the US list. Next slide, please. Other thing that I think is particularly useful to know for those in the US, over the last 20 years, Sarbanes-Oxley, US has become really targeted towards large companies. I mean, I think it's pretty obvious. Many companies now stay private well past the reaching unicorn status. You know, but even for the non-unicorns, it mostly doesn't make sense for you to go public with a less than $500 million market cap. TSX is very different, you know, partially because the venture capital is not quite as well developed there. So companies go to market earlier, and the capital markets are there to support earlier stage companies. So Toronto Stock Exchange, average financing size around 68 million, market value is 2.1 billion, average market size. The TSX Venture, much smaller. So your average raise is only about 3.5 million there. Average market value, less than 50 million. One thing though that I think is important to note about that, you know, some companies here in the US, they think, yeah, 3.5 million, yeah, raising that, but I could do that by, you know, calling up my lead investor and getting that. But what's different about, and we'll see some companies that do this a little bit later, but what's interesting is that it's much easier to do multiple raises. So you're doing a 3.5 million raise when you need that money, and then a few months later you can do another 3.5 million or a little bit larger at a better valuation. You're not having to raise capital 2 years in advance of needing it. You can raise it as you need it. Next slide, please. Next slide, please. Okay, yeah, thanks. So here's just a little bit on the structures that are available for going public. Pretty standard to what you'd have in the US. You know, there's kind of the traditional IPO. There's reverse takeovers, which are here as well, and direct listings. I think the thing that's kind of the most interesting about Canada is partly the RTOs and what we call our QT, which is sort of the mini version of a SPAC. Canadian markets do have SPACs as well. They're not quite as popular up north as they are down here right now, but we do have a couple. But what's interesting is the CPC sort of mini SPAC is actually the most popular way for companies to go public. That on the RTO, which is a reverse takeover. And unlike in the US, where that's sort of reserved for the OTC markets, and there's kind of a little bit of a stigma about doing that, and there's some difficulty. In Canada, it is a respected path towards going public, and many respectable companies that have gone on to do very well have taken that path. Next slide. Also, as Delilah was saying, Toronto Stock Exchange started out being primarily for resource companies. It was designed as a good way to get companies money to go and dig a hole in the ground and see if there was gold there or oil there or what have you. About a decade ago, that really started changing. Innovation started coming to the markets in a more consistent and sizable way, to the part now where our growth sectors have become kind of the biggest component of the market now. And that you can see, you know, on the slide that kind of composes five main industries that we sort of condense into our growth sectors. What we're going to talk about here, though, is and what Delilah and I mostly focus on is the innovation sectors, which is 3 sectors within that. That's the life sciences, technology, and clean technology. Next slide, please. So those sectors really have exploded, particularly in the last 5 years. It's been the #1 sector for new IPOs and other listings. The #1 sector for international listings. They've raised nearly $60 billion of capital. Market value of those companies is $331 billion across both TSX and TSXV. Of course, about not quite half of it, but I think about 140 billion US is from Shopify, which is just an incredible story. Was listed for about $1 billion in market value when it went public just 4 or 5 years ago. But that story has really whetted the appetite for anything technology related in Canada now. Next slide. Okay, so that's a little bit about the background. I think what is really interesting from the perspective of a company, or if you're an investor and you're an advisor to companies, is thinking through how the process is for a company that looks to go public. There's really a sense of partnership and guidance, and a pathway to success, long-term growth. So the majority of companies that will go public in Canada list first on our venture exchange. Our ideal path is for them to spend a little bit of time listing on the venture, grow, build the company, and then we graduate them to the Toronto Stock Exchange, our big board. We've had nearly 700 companies in the 20 years from venture that have graduated to TSX. 87 of those that are currently listed have market values now that are over 500 million, and almost 30% of the technology companies on TSX have graduated from TSXV. Next slide. So that is part of it and I think that pathway itself and the support, and I didn't really talk about, I think, also how TSXV gives early stage companies that don't have quite the experience yet with public markets a really public markets with training wheels is how I like to think of it. It's an opportunity to sort of understand the requirements, build out your IR team, build out things, and then after you've gained experience, graduate to TSX. The next step for, particularly for US companies, but also for companies listed in Canada, is it becomes very easy once you're listed on TSX to do a dual listing in the US. So we have 219 companies that are dual listed on another exchange. Most of those, I think 189 are dual listed NASDAQ NYSE. And the vast majority of those listed first in Canada before coming down south to the US. Next slide. Okay, almost towards the end here. Just wanted to talk, as I mentioned, so far this year, just in the first 2 months, we've had 5 companies from the US go public. 2 of those have listed on the big board, the Toronto Stock Exchange. That's Hemp Fusion, which is a cannabis company, and also a SPAC, which is Subversive, and they're acquiring. They're looking to acquire an Israeli cannabis company. And then we've had 3 TSX venture listings across multiple sectors. So we have one in the Skylight Health, medical care services, life science business, ProStar Holdings, tech. And then SciBio, which is another pretty exciting sector that is growing, is in the hallucinogenic space. Excuse me, psychedelics. So and that is another kind of growth area that is difficult to list in the US currently. Next slide. So last thing I wanted to do was just kind of walk through a couple of brief case stories of US companies that have listed in Canada and show sort of what is possible. So mCloud is a kind of big data company. They work with large companies, primarily in oil and gas and wind, have sensors deployed, and then use the data that they get from those sensors, apply AI and do some cool stuff with the data. So they listed in October of 2017 via a reverse takeover. Since that time, they've raised $47 million Canadian over 9 rounds and done 8 acquisitions using their shares as currency for at least part of that. Again, just show what's possible in just a little bit over 3 years. Much harder to do those kinds of things, particularly the acquisitions, if you remain a private company and have to convince your venture backers to make that possible. Similar story with Boardwalk Tech, another technology company, did a RTO in June of 2018, raised $15 million over 6 rounds, and have done 1 acquisition. And then finally, I think this is particularly interesting is Galaxy Digital. They are in the crypto space. They listed on TSX Venture in 2018, another reverse takeover. See, very popular. Last year, 2 years after listing, they graduated to the big board, Toronto Stock Exchange. And then a couple months ago, after doing that, they've been able to raise $50 million in 1 round. I think that was in October or November of 2020. Yeah, and next slide. That's a little bit it for our presentation. Our contact information, if you know of anyone who would like to learn a little bit more, feel free to ask us questions now, or you can reach out to us via email, and happy to schedule a call and learn more about your particular situation.
Thank you very much, Reid and Delilah. Excellent overviews, and I think probably news to most people that you can get that kind of capital at that level. So really interesting information to share with us today. There are a couple of questions. One here is that this New York market is doing fairly well in out here on Long Island, for example. The life science industry is doing quite well. The AI industry too is booming out here, as is other technology sectors and startups. There's a few incubators driving business. How would these companies approach the TSX or the venture exchange? What would the first step be, besides reaching out to you? I guess if that's it, then we can say that.
I'm happy to answer that if you mean so. Reaching out to us is of course a great way. Going to our listings page, on the link here, sending them to our U.S. site. There will be a new guide to U.S. listings, hopefully next week, maybe, Delilah, very soon. And then also, if anyone who is going through an accelerator, as I mentioned in my bio, I'm on the board of the New York City Innovation Collective, which is a collection of accelerators in New York City, New York region. Would love to be able to connect them with us, and that's how I was connected originally to the Toronto Stock Exchange, was through that. That's sort of another great way to get in touch, and we can kind of cash officers.
I think one thing I would say is that, for any entrepreneurs at any level to really be understanding all their capital options, it's not easy growing and scaling a large, a company from startup to large. There are different capital options, and you should just know all of them, and we are one of them that they might not be aware of. And of course, doing the analysis of what's the right thing for the company and their growth strategy for long-term growth. And so, the process around, what we do, what Reid and I do, is we educate the companies on, if this might be a viable option for them. We introduce them to the capital providers in Canada. So those are the Canadian banks, or some of the deal guys who have the capital pool companies are looking for companies to acquire. So it's, so our job is to educate and then introduce them to the actual capital providers.
Yeah. I was wondering, what should certainly it's up to the finance officers, I guess, of the companies interested to do the due diligence. But what kinds of things should they be thinking about before they even approached you? Maybe you can share that.
Yeah, well, some of those things like that I talked about in terms of, do they have a reason to be a public company? Because most companies should actually not go public. I mean, that's just truth, right? So do they have a reason to be public? Are they ready? And especially around, do they have the right management team? Do they have those audited financial statements? And these are all things, by the way, that any company, whether they go public or not, but if they're looking to eventually access, large pools of capital, whether it's venture capital or private equity, are going to be required this very similar things. So, I know when I'm talking to early stage CEOs, I say, understand what it means to be a public company, what those requirements are going to be. Start acting like a public company well before you go public. And even if you never do, having strong internal controls and fiscal management is just smart no matter what level you are. Because I can tell you that the costs of going public are directly impacted by how ready a company is and how much they have to clean up, whether it's their, to get an audit done can be very messy and expensive if it's not been, done properly since the beginning of the company. And it's earlier to put those controls in place it's easier when you're an earlier stage company than when you're later and then you got to go back and clean all that up.
Yeah, it's a great point. There was a colleague of mine named Jim Crane who went public many years ago out of Texas. His logistics company called Circle, I think it was called at the time. He took it public, and about 5 years later, he tried to take it back because he just didn't expect, the amount of time and energy they would be spending on governance and reporting. And it was in the middle of Sarbanes-Oxley and so forth. So he failed in making it private, but he did get bought out at quite a nice price. So he's happily retired. Actually, he started another company that's private, which is doing quite well.
Well, and as everybody in the audience today, we're all investors too, right? Or have the potential to be investors. And certainly in Canada, the percentage of people who are retail investors is quite high, which is why a venture market like ours is allowed to be so successful, because most people in Canada are buying those stocks. So, if anyone's wondering, okay, how do we participate in these amazing, robust markets right now? How do you, I can't tell you what stocks to pick, but I can tell you that we have a couple of programs that highlight some of our best companies. So we have the TSX 30. So this is the ranking of the top 30 TSX companies on the market, and then we have the TSX Venture 50. So this is a ranking of the top 50 venture companies, and those are the ones you really want to look at, because in theory, earlier stage, higher risk but higher reward potential. And if you can, ride some of those companies, the wave up from being on the venture exchange to going to TSX and then do a listing onto NASDAQ or New York. So those are a couple of programs if people are wondering, like what are some of these companies and maybe we should be taking a look at them. You can see those rankings on our website.
Yeah, that's a good. I'm going to have to look at those myself. I didn't realize.
And by the way, if anyone wants to get in on this, the Bitcoin craze, we at TSX, we launched the first Bitcoin ETFs in the world. And so, what's interesting about the Canadian markets that people, especially Americans, probably wouldn't think that, that we're that edgy and innovative. But our market has always been at the forefront of those kind of innovations because, again, it's a smaller cap marketplace. So really, early stage, trending companies. So whether it's like we're talking about the Bitcoin space, so having the first Bitcoin ETFs, so again, if people are thinking, how do I participate in that whole trend without, buying directly, you can now get some of those on through an ETF.
That's excellent. Excellent. I didn't realize that. One last question is, you mentioned, I think you, Delilah, or maybe it was Reid, mentioned SPACs, right? Investments through SPACs. And if I'm not mistaken, SPACs are driving most of the IPO money down here in the States right now. How is that affecting what you guys are doing, and maybe share some light on that whole area in the next minute or two we have left?
Yeah, well, certainly, again, it just goes to show how much money is on the sidelines, right? Waiting to be deployed. So yeah, the SPAC craze has been incredible. And, the number of SPACs last year, which was a lot of SPACs. So far this year, the first 2 months, there's already the same number of SPACs raising about the same amount of money as all of last year. So that's only the first 2 months of this year. So what does that mean, though, for companies? So what's happening? So the practical reality of a SPAC is basically it's a shell that's created by a management team and raises a whole bunch of money with the anticipation that in the next 2 years they're going to find a really great company to acquire. The practical reality of a SPAC is that, you know, the private company that they're going to acquire needs to be at least probably three to four times the size of the SPAC. So, you know, those $1 billion SPACs or $500 million SPACs, you can see what kind of size of companies. But the practical reality is that a lot of this money will be interesting to see if it actually gets deployed. It's in trust, and then the shareholders will vote on if they like the acquisition target. A lot of the money is coming from hedge funds, you know, et cetera, that are not necessarily long-term investors in the private company. So it's definitely impacting, you know, the traditional IPOs. It's impacting, you know, even our market as companies are being wooed by SPACs and the valuations are, you know, high. And I mean, I personally, well, for companies, you have to just think about, is there going to be a natural market correction once you're actually listed? Because the valuation was so potentially overinflated. So I just say to CEOs, just be really smart, you know, think about it. Don't be wooed by the high valuation, because you will have to, as a private company or once you're publicly listed, you know, rise up to that valuation, and it may or may not be feasible for what you're actually doing. So a lot of money, a lot of hype around it. And CEOs should just do their due diligence and be careful about what the long-term impact of going public that way could be.
Yeah, it could generate a lot of CEO turnover too.
Yeah. Yeah. Well,
Yeah.
That's definitely true. Yeah.
Yeah, that's excellent. Really, we could spend the whole afternoon on this subject. I think this is excellent. I really appreciate you taking the time to share that insight with us. I want to thank Paul again as well, if he's still with us online, for excellent insight in terms of the market and how it's moving since the pandemic. So thank you both. And before we move to the event floor, back again to give you a little bit more time to talk with our speakers and network with each other, just wanted to cover a couple of things upcoming in Maple that you may want to put on your calendars. First is our next Maple event will be in our British Columbia chapter on March 31st. This will be featuring Brookfield Properties Investment. Brookfield is based in their U.S. operations, based in downtown LA, in the historic Fashion District at the redesigned and reimagined California Market Center. And they will provide us some excellent insights into the commercial real estate market. You can RSVP this to all our programs and events on our event page, which is found on our website. And finally, if you aren't already a Maple member in our community, I'd hope you consider the benefits of joining Maple. First, we cover probably the only organization that fully covers the economic ties between Canada and U.S. fully, and it's our whole preoccupation, right? And I think we're the only association today that does that from a purely business perspective. Joining Maple's Business Council brings Canada-U.S. executive network and executives in that network to you directly. Also, networking through Maple can help you to share insights through our content platforms and stay on top of key news and developments in cross-border trade. And last but not least, we're a proud partner with the Consulate Generals of Canada here in New York, LA, and elsewhere, the U.S. Commercial Service, the Economic Development Agencies, and stakeholders like Ontario Trade and Invest, and now the Quebec delegation. So we provide access to some really great resources for you to build your business through cross-border trade between the U.S. and Canada. And if you'd like more information on membership, please reach out to me at john@maplecouncil.org. I'd be happy to take you through and introduce you to some other members to see how they get value out of our organization. So with that, I want to thank you all again for joining us. We're going to turn back over to the conference floor now to give you some time to network if you like. And appreciate you joining us today, and hope to see you soon at the British Columbia session. Thank you. Robert, over to you.